This one goes out to all my Fishbowl peeps. I'm Lance, Fishbowl Inventory Expert since 2006. And if you've plugged Fishbowl into QuickBooks and have made a big mess, and you're really confused and irritated about how things are going over in regards to labor, this video is for you. So let's start here. Up on the screen, I have before you the sample manufacturing sample file chart of accounts. And you'll see what QuickBooks recommends to users when they first set up QuickBooks. Under wages down here, we've got nothing to do with labor. Labor is not found under expenses when you set up QuickBooks and Fishbowl, and QuickBooks recommends how to set up the chart of accounts. This is their sample manufacturing, right? This is kind of what QuickBooks recommends. That labor is in the cost of goods sold area. And that makes sense, right? Materials and labor mixed together makes the part, and you sell the finished good, and that credits inventory and debits COGS. So you would think labor would be COGS. And I think that's the way most QuickBooks users think that have been using QuickBooks for years and years and years. However, plug in Fishbowl and Fishbowl looks at it differently. Okay, let's look and see how Fishbowl looks at it. So hopefully this helps. I put together this little mock chart of accounts here. And if we scroll down, you'll see that under wages as a sub-account is direct labor absorption. Now you might think, well, wait a minute, when we plugged Fishbowl into QuickBooks, it just created a labor account under expenses. And worse, that labor account was a negative. Fishbowl didn't set it up this way. It just threw in a labor account on your chart of accounts. So that's another area of frustration for accountants. When you first plug in Fishbowl to QuickBooks, if you just go with the default accounts, most likely it's not going to make changes to your chart of accounts that you're going to appreciate. And that's another thing to understand is when you first plug in Fishbowl to QuickBooks, it will set up accounts if it doesn't see that you have an account with that name that exists, and it will make changes to your chart of accounts. And it's misleading because they're called default accounts, and most people interpret that as meaning recommended or suggested accounts. But it doesn't really. What it means is in order to have a successful connection between the two software programs, you have to connect those accounts. They're more like the minimum requirement. So just because it says default doesn't mean that's recommended. If you're watching this video before you've connected Fishbowl to QuickBooks for the first time, you're the lucky winner. If you've already connected the two, you feel the pain of others and you need to clean up your chart of accounts. If you've watched some of my other videos, you know that I harp on this and get in my soapbox and I say, set up a sandbox, set up a sandbox. That's the best way to go. Don't connect Fishbowl to QuickBooks right out the gate unless you're just a really simple, small company. If you have any level of complexity with manufacturing, if you're a company doing over 5 million a year, 10 million a year, then careful thought and consideration should be made before you connect Fishbowl to your live QuickBooks account. Definitely consider first making a backup copy of QuickBooks and connecting Fishbowl to a copy or a sandbox version of your QuickBooks. And also put careful consideration into how you want your chart of accounts to work with Fishbowl, which when you're very new to Fishbowl, brand new to Fishbowl, you probably have little to no idea how Fishbowl is going to send its data over to QuickBooks. If you want to know or at least get started in the process of understanding how Fishbowl communicates or wants to communicate with your chart of accounts in Fishbowl, Google Fishbowl journal entries. This is a great resource that chronicles all the different journal entries Fishbowl will send over to either QuickBooks Online or QuickBooks Desktop. It's very thorough. Google Fishbowl journal entries. So yeah, let's take a look at labor for a second. Okay, so what is Fishbowl thinking when it's setting up labor as an expense, when for the past decade you've been used to seeing labor as a cost of goods sold? So QuickBooks arguably isn't really an inventory management system, right? It's an accounting software, and the reason you're plugging Fishbowl into QuickBooks is because something is telling you that, and you know that already, right? So with inventory accounting, especially with manufacturing, you pay your people, that's wages, as you see here, but then you're going to absorb some of their wages and debit inventory. And it depends on which level of manufacturing your bill of materials is at. If you have multi-level bills of material, then you may absorb labor off the bottom of your P&L onto your balance sheet at the raw goods stage. Maybe you have a part that you've mapped to WIP and you're building a work in process part in your manufacturing area, and so you're going to absorb labor and debit WIP. Maybe you're at your final stage finally and you're completely done with your assembly process and you're building the part that you're going to sell. At that point, it would absorb labor and absorb all the other components, right? Your WIP and raw components, everything that's on the bill of material, and debit finished good. On the Fishbowl side, it looks like this. You've got your bill of material. This example that I pulled up is the bike example. You've probably seen this before. And some of these might be sub-assemblies. But regardless, along with the rest of these items, you would add a labor and type in how long you think it would take to make one of these items. Okay, so if you're in the food industry, you're probably going to be dealing with fractions, especially if you're making batches, but the bill of material is set to just make one recipe. So you would need to think about how much labor goes into the entire batch and then divide it by the number in the batch to come up with sort of a fraction. This is a bicycle, so to assemble a bicycle, let's say it takes them an hour and a half to put one together, and click finish. So we add labor down here, okay? And the best way to set up, let's talk about setup as well. The best way to get started is to first put your labor on all your bills of material and figure out the time of the labor it would take to make this quantity of the finished good, whatever quantity you put here to make the finished good, which should be like the lowest common denominator. Put it on all your bills of material, but before you put it on those bills of material, make sure that that labor type part does not yet have an absorption rate. Okay, I'm just talking about best practices right now, which are kind of relevant to setup as well. When you want to set up your labor, as soon as this has a cost, if you're using the software, if this has a cost, then it's going to start absorbing labor from whatever account it's on in the chart of accounts. And if you're not ready for that yet, set this to 0 and put your absorption rate in later. Okay? As soon as this has a number on it, then it's going to start absorbing labor off of whatever account you have it mapped to, which I'm recommending we map it to an account something like this, a sub-account of wages and call it direct labor absorption. I think it's really important that the name of the account makes sense, because when a third party, maybe you have an outsourced CFO or a QuickBooks Pro advisor that works for you part-time, and they look at your chart of accounts and your P&L and your balance sheet, we want them to understand what this account is. And if you label it and name it descriptive of what it's used for, then it'll make more sense. If you just leave it as the default name that Fishbowl gave it, labor, it's not going to make a whole lot of sense. But if you use the word absorption, that makes sense. And especially if you use the word direct, because that's what we're absorbing out of wages and saying, okay, this is direct labor, and this portion of wages goes with inventory. And then on the P&L, it'll look nice because the difference between wages and direct wages is indirect wages, and the P&L will already do the math and say, oh, we take wages, we subtract direct labor absorption, and the difference is your indirect labor. So we get the visibility that we're looking for. Now, if this doesn't apply to your chart of accounts, and this is like totally against everything you believe in on your chart of accounts, that's totally fine. That's totally fine. This is not a required account, but I find the people that I work with that understand that Fishbowl programming suggests that this is the best way to do it, it makes sense for a lot of simple small business manufacturers. And that's what Fishbowl is. It's a robust manufacturing software for small businesses. Okay? And I say that because I know I've seen a lot of chart of accounts that already have wages divided up into all of these different categories, office and warehouse, and different subcategories of warehouse and plants and manufacturing and whatnot. And that's okay if that's how you want to do it, but just remember this. Fishbowl does not support cost of goods. Okay? It only supports cost of goods sold. All right? So Fishbowl does map to cost of goods sold, but it doesn't map to cost of good. And what that means is it's expecting to credit whatever account you map your labor to. So you're free to map this to whatever you want. But notice cost of goods sold is grayed out. Okay, so if you map it to cost of goods sold and you decide you want labor on the top of your P&L, that's fine. Just understand that it might look a little funny and might behave differently than the way you expect, because Fishbowl is going to debit cost of goods sold when you sell the finished good. And the finished good is already going to incorporate materials and labor from the bill of material and the sub-bills of material and the sub-bills of material. When Fishbowl creates cost of goods sold when you sell the item, it doesn't divide it up and say, well, we remember when you manufactured this. Fishbowl doesn't do that. We remember, and so we're going to debit this much labor and this much material when you sell it. No, that's cost of goods. That's not cost of goods sold. If you want to see the division of labor and materials, that's not going to be in QuickBooks. That's going to be in Fishbowl. But if you set up direct labor absorption, as I described, it will basically give you the visibility you're looking for. If you want to know how much labor was absorbed in 1 month, you can run P&L by month and see, oh, we absorbed this much labor in this month. And if you want to see how much labor went to your projects, your jobs, or your finished goods, you can run reports in Fishbowl to see that. Now, I've only talked about internal labor. I haven't talked about outsourced labor or paying vendors to do something, a contract manufacturer. I'll have to cover that in another video. But this comes up all the time so I wanted to cover it in this video. And yes, the unit of measure for labor should be hours. Put in the quantity it takes to make one of those quantities. Also, when you close out a manufacturer order, Fishbowl will give you a place to plunk in labor on this screen here. Let's move forward. In this screen here, if you add labor, it will show up on this line, and you can actually put in the actual quantity of labor there. Now, Fishbowl does have another product as well called Fishbowl Time, and if you purchase this product, your laborers can select the work order that their labor applies to, and the actual labor will be synced in with Fishbowl. So decide whether that will make sense with your workflow before purchasing this product. It may or may not make sense to track exact actual labor and have people clock in and clock out anytime they close a work order. This product makes sense if your work orders take an entire shift, for instance, to a closeout. 4 hours or 8 hours. If your work orders are taking that long to close out, then this makes sense. Doesn't make sense if your work orders take 30 minutes. That would drive people nuts to clock in and clock out on every single work order. So in that case, it might make more sense to have what I would call just a standard labor, where you don't care if it's exact, but it's close enough. It's got a close enough absorption rate. It's got a close enough estimate of time. And you keep an eye on it. If you feel like your estimate was off, then okay, adjust it. And the advantage of absorbing labor into your inventory, it has a more accurate inventory balance, and then once you sell the inventory, you have more accurate cost of goods sold, and of course that equates to a more accurate margin. So you have a more accurate profit estimate when you're absorbing labor. Now, like I said, this isn't for everybody, but I think it's for most people that I've worked with. This is something that they like, and it's a powerful automated feature in the software to help calculate true values and true margins. And it looks good for most people that use it if it's set up right and you understand it. So it absorbs off the bottom of the P&L, credits that, so that's going to be a negative number, debits whatever account your part is mapped to that you're making, and then when you sell this will be given a credit, and then COGS will be debited. Whatever account you have your part mapped to, COGS will be debited. And then of course, when you ship, one of your income accounts are going to be credited and your AR will be debited. Unless they paid for it already, then your bank is going to be debited instead. Hopefully you enjoyed this video. Comment below if you'd like to suggest other videos or other topics that you would like to hear. Comment below and click that like button if you felt like this was helpful. And to see more videos like this, be sure to subscribe. Take care, my Fishbowl peeps. I'll see you on the next video.